Welcome to this video exploring the IMF's recent warning of disorderly house price corrections in Europe. Right now, central banks are increasingly raising interest rates in order to reduce inflation levels. However, this might lead to serious consequences for both house prices and mortgage holders, who may find it hard to keep up with repayments. Recently, data from Europe's statistics office Eurostat showed house prices dropping for the first time since 2015. The IMF estimates that the Eurozone's headline inflation rate is likely to average out to 5.3% this year and 2.9% next year, above the European Central Bank's target of 2%. In Sweden, for example, house prices dropped more than 6% in 2022, and the IMF estimates a potential overvaluation of 15 to 20% in most European countries. In efforts to tackle this issue, the IMF has recommended that central banks need to continue increasing interest rates, and maintain those rates until mid-2024, with the expectation that Europe will come back to its inflation rate target of 2% sometime during 2025. This is what has been dubbed as a tightening of monetary policy, and this, combined with the declining real incomes of mortgage holders, has caused some fear of even further house price declines. Meanwhile, there are some countries, such as the Czech Republic, Denmark, and Sweden, that have already experienced declines in house prices, and, in some cases, this has led to situations where people are struggling to make repayments. In response, it has been suggested that the situation needs to be tackled with stress tests and careful supervision in order to better assess the risks of real estate markets. At the same time, in order to reduce the chance of a disorderly correction, the IMF also recommends that measures should be put in place to ensure that both household and bank balance sheets are not affected by these decreases. This could be done through providing mortgage relief or loosening lending conditions, as well as providing other support for households that are facing difficulty. Ultimately, the key to preventing further declines in house prices is to ensure that inflation rates remain manageable, while ensuring that monetary policy is tight enough to ensure that inflation stays low. It is essential that central banks in Europe keep this balance between inflation and monetary policy if they are to ensure stability in real estate markets. Thanks for watching this video about the IMF's warning about disorderly house price corrections in Europe. Be sure to keep up to date with further details on this topic.